Welcome to the lounge and the US Indices report for the S&P, the DJ and the Nasdaq, and it appears that a top can be in play, and that's what we're going to be looking at now. So from wave A here, we've got an A and a B and a C wave here, and that being the case, then we would see new lows made down. We can just sort of look at the 1800 as a ballpark sort of figure at this stage. And yeah, if you were going to short, then the stop would need to be above the 2013 area, which is above that little spike there. And we'll take a closer look at this in a moment. So yeah, that can be the end of the correction. So let's just drill in and have a look at some more detail and the risks involved in shorting. So first of all, I was expecting, from this little section here, 5 waves up through to here to cover a gap at 2035 on the cash market. So that hasn't really played out. So the risk is that, all of this here could be the third wave here. Probably not, but it's possible. So if that was going to be the case, then from this low to this high here, the 38.2 retracement level comes in around these previous wave 4 lows here as well. So that's where the risk would sit. And normally, I would see market moving down here to bounce off the first level here and come back and retest that before moving off here. So either way, it's going to be a little bit tricky. Now, obviously, this is where the stop's got to be above this high here, and the reason for that is that this move down from the high here down to this low here is in 5 waves. So this would be wave 1 and wave 2 here, and then the next series would start here. Now, if we get a situation where we've got 1, 2, 3, 4, and 5, like 5 waves here, then I know that that would be definitely the confirmation that we're looking for. And after these 5 waves would be an A and a B and a C coming back up and testing here, and then moving down from here. So these 5 here would give us another 5 over here, which would obviously send us down further, and moving through this this consolidation support level over here, and any possibility of being a 4th wave that we've just sort of missed for some particular reason or whatever. But yeah, so let's go into the 15-minute chart here. So as it stands at the moment, we've got 5 waves down through to here, which we can label as wave 1 and label this as wave 2. So technically we shouldn't go above that high here. So that's why the stop was at 213 here. Yeah, so until we get those 5 waves, then this here being a 3rd wave would be basically 1 and 2 here, and 3 and 4 and 5, something like this here, which would be longer than this one here, obviously, and a 4th wave here somewhere, a 5th wave here, and then an A and a B and a C wave pulling back up 50 or 60% or to this supply level here, and then down from this point here. That's the sort of textbook sort of thing about the whole thing, and that's what we'll be sort of looking for. So shorting anywhere around here, that would be your risk here. So getting a position here and getting a position over here, and then adding down under the 1972 area here, or 1980, building in on this side over here would be a way forward. But getting this first 5 waves here is the safety net, really, because then we get another 5 over here. And it's the same as this, we get 5 here. So after a correction, you can look to short here to get the next 5. But really, this here can be an A wave, a B wave, and a C wave from here, and then build up back up from here and go into another high here. So this is why we need to see the 4th wave and the 5th wave here. So yeah, but apart from all of that, I mean, I would have expected this gap to be sort of filled, but obviously it hasn't made it up here. I was thinking 1 and 2 and 3 and 4 and 5 here to cover that, but yeah, it's not there. But so we've got to run with what we see, and this is what we're sort of seeing at the moment. And of course, this is the same for the DJ as well. So any stop here would need to be above that 17,100 here, and same thing applies here. It's looking quite good in terms of the speed in which this is travelling down here. That's another thing with the personality. If it was an ABC, it would be on a bit more of an angle, and normally the wave A here would be sharper than wave C over here. But in this case, we're getting this move down here sharper than this one here, so it tells me that we're on the right track here. You know, you can wait and get a back into this supply zone here. You could probably, it may move back that far, may not, you know, but there should be some sort of consolidation before you see further downside here. And of course, this is the same for the NASDAQ as well. Haven't labelled it, but same thing as well. We've got that sort of impulse wave down through here. In this case here, we're still above the closest largest number here, which is this guy here. So we need to be a little bit careful about this one. It hasn't moved down as much as the other markets. So always, you know, if you're shorting, always go for the ones that lead into a trend, as the leaders tend to cover more range. The followers might be safer at the end of the day, but they've got less range involved in them. So look, that's really it in a bit of a nutshell. It's all pretty short and sweet there. There's a very high probability of a top in play in the S&P, and yeah, we can work that in the stock market with shorting equities. That will be an easier game to play, you know, end of day trend than intraday, of course. So maybe give that a bit of thought as well. Have a look at the New York stocks that we're putting out, because I'm always looking for the weakest possible markets to build in short. We have been building in short, if you've noticed. So yeah, have a look at some long-term equity trades on the short side. Cheers.